Ladies and gentlemen, welcome back to the channel. We have everything you guys need to know on AMC stock as well as the broad markets to close out the Friday trading day. Now, we're going to go ahead and dive straight into it. I don't want to waste your time at all. Hit the like button, subscribe to the channel. Let me know down below in the comment section what you think about this information as well as that if you guys want to come trade with us live in real time. Link down below in the description of this video. So, first and foremost, AMC stock is down about 2.65% today. Recognize we're holding that 8-day moving average. Now, none of this really matters. Let's be honest. I've said it like 2 or 3 times already, but I'll say it again. None of this matters. Do you guys hear that thunder? I just heard the loudest thunder of my entire life. It's actually insane. As I was filming a clip of this video, I'll go ahead and put that right here. Stock in the NASDAQ. Holy shit, did you hear that? That was thunder. It was absolutely insane. But, I mean, nonetheless, when we're thinking about AMC, the only thing that matters is going to be this court situation. That is literally it. At least in the short term. AMC's earnings don't matter. Technicals don't matter. Nothing matters. Now, the logic is, as I have previously said, this is a bearish and bullish catalyst. That's the bottom line. There's a good argument for both if we want to be 100% real with each other. Now, which argument is better, obviously, is the bullish catalyst, the bullish event, right? And that is the judge ruling in favor of this reverse split. Now, the reverse split itself, the dilution itself, is not bullish. But AMC raising billions and billions of capital is very bullish. Especially, consider this. In the past, AMC has had to dilute its float hundreds of percents to raise a fraction of the capital that we're about to raise. This time around, AMC diluting its share price of 25%, or not even the share price, but the outstanding float, around 25%, will give you over $1 billion of capital. You have not seen that with AMC. So, shorts want to say this is such a negative thing for AMC. I say, sure, it's negative, right? Dilution's never positive. But is the dilution worse than the outcome? And that's obviously not. Dilution's bad, but the outcome is very good. So long story short, the psychology of the markets after this court date will say, hey, court date's already happened. It's already bad. We already know it's bad. What's coming next? And what's coming next is very bullish for AMC. That's the bottom line. Raising billions and billions and billions and billions of dollars of capital is never going to be a bad thing. And I don't understand where a lot of people's mentality comes from with this, that can be negative. There's no way around that it can't be negative, right? Every big rally we have seen with AMC has been because of capital being raised. Now, this time around, it's just a lot sweeter of a deal. That's it. It's a lot more capital, and it's a lot sweeter of a deal for shareholders. So, I would like to hear the bearish arguments. I haven't heard one that makes a lot of sense besides dilution and, you know, speculation on naked shorts and synthetic shorts and all of that. Let's be honest here. Nothing's going to change as far as the float that's sold short. You're still going to have the same amount of shares that are sold short. And if we take a look at the Ortex data, the recent developments that we have seen are kind of insane, right? You're looking at a short interest of free float at about 29% right now. Now, as I talked about in the last video, this means the actual float that is sold short could be 150, 200% short interest. Because that is essentially what we've seen with GME, right? If retail investors are really holding 80% of the float, call it 70% of the float, call it 50% for all I care. That means retail is holding around 400 million shares if you believe retail still owns 80% of the float. Well, if you have 145 million shares sold short, well, all of a sudden the short interest is 150% of the float that is actively trading hands. And I think that, you know, is a big problem for the short sellers. And I think that kind of puts things into perspective. Now, if we take a look at some of the cost to borrow fees as well, this is another big story as well as the short interest that has recently rallied. Cost to borrow fees from Interactive Brokers at the time of recording this video at 780%. That's insane. AMC stock is still on the threshold securities list with an average cost to borrow fee of 628%, a cost to borrow max of 1,040%, and a cost to borrow minimum of 0.59%. Obviously, that cost to borrow minimum is not correct, right? That cost to borrow max, probably more correct. Over 1,000%. These are levels in which are just unsustainable. So I don't expect the cost to borrow fees to go down anytime soon. And I think actually after the reverse split and after all of this, capital raising and dilution or whatnot comes, you could actually see an even larger move higher in the cost to borrow fees. Now, if we take a look at the option activity on the day, you have seen 24 orders totaling $2.79 million with a positive order value of 9%. Over the past week, you have seen 53 orders totaling $34.35 million, positive order value of 1%. I mean, you're 8-9 times more bullish today than you have been recently, and you're really not seeing that many bullish orders coming through. Here's a July 21st 350 call, two of them worth $38,000 and another one worth $30,000. You're also seeing a January 19th 2024 $6 call worth $190,000. Another July 21st $4 call worth $68,000. So you're not really seeing too many big call positions, but what's different today is you're not seeing as many of those $1 million+ put positions. But AMC stock is still falling. And I think what's happening is hedge funds are going back and forth between, using options to short the stock in any given day or shorting the stock using shares. It almost looks choreographed by hedge funds and institutions. Like, hey, are we going to target the options today? No. Okay, we're going to target the shares today. Are we going to target the shares today? No, we're going to target the options today. That's kind of what this whole situation is starting to seem like. And the ultimate bottom line is just the short interest alone and the cost of borrow fees are a big problem for the hedge funds. Not to mention that they are all betting the AMC falls. They're not hedging out at all. Like, you would see logically some hedging taking place from these hedge funds and institutions. That would make sense. That would make me somewhat less bullish on a potential Moass, right? Or in my opinion, the Moass that is coming. If they were hedging out, because that means maybe, hey, if they're wrong, if the stock does rally, then maybe these hedge funds and institutions are going to hedge out their loss in some way. Maybe they won't be squeezed. Well, they're not doing that. They're refusing to hedge. They're going to get squeezed out of their short positions. That's a certainty in my mind, at least. Now, if we take a look at some of the option activity that we're seeing for today, as well as next week, you got about 4,000 calls in the money, 175,000 calls out the money. In the money puts at 122,000, out the money puts at 138,000. So it looks like a lot of options on both sides are actually going to expire worthless this week. Now for next week, you have 51,000 calls currently in the money, 435,000 calls that are out the money. In the money puts at 327,000, out the money puts at 470,000. So there's a lot of room for AMC to rally here and to see a lot of calls go from out the money into the money and see a lot of puts go from into the money out of the money. Both of these, when puts go out the money and when calls go into the money, that is buying pressure. That is bullish from the market makers. That can give you a gamma squeeze. Now, I don't know if we're going to get a ruling from the judge. Could be this weekend. Could be next week, could be weeks from now. I think it's coming soon. Now, why do I think that? Well, it's just a hunch. Don't base any of your investment strategies based off of what I say because it's solely just a hunch. But I think it's about time, right, to get this situation rolling, to stop kicking the can down the road as far as the courts are concerned. So that's something that I want to continue to watch. Now, as far as AMC and the actual buying that you've seen from hedge funds and institutions, you've seen a lot of shorting, that's for sure. You've seen a lot of put buying, but look at this. You actually have risen month over month in institutional ownership of AMC. And here are the 13F filings that are coming out. We haven't got the notable names such as Citadel, such as, State Street or BlackRock or Vanguard or any of these other big players. Sequoia, I think is how you say it. You haven't got any of those filings. And I noticed something. When I look at other stocks, I notice a lot more filings have already came out. But when I look at AMC, you're seeing a fraction of the same amount of filings that you've already seen come out with other stocks. So I think that is something to take note of. I think that's weird. I can't really draw any conclusions from it. Maybe you guys can infer what that maybe means. Maybe they're cooking the books a little bit, a little cooking, never hurt anyone besides the apes. It's not like the government's gonna care. It's not like any regulatory agencies are gonna care. But that's just a little bit of my speculation, okay? So a little bit different from what we have seen as of recently. Now, bank earnings today were pretty bullish across the board. Nothing to be too concerned about. Citi seen some pretty weak numbers. Some of their credit card loans are starting to, go into default. That's kind of the same story for all of the banks, and that was probably the worst thing you could say about the bank earnings. Now, as far as Michigan consumer sentiment, as we went over in the previous video, that came in super good. That came in at the best reading since you have seen since 2021, about 2 years ago. And this number came in at 72.6. You were expecting 65.5. Now, the one-year inflation expectations came in hotter than expectations at 3.4%. You were expecting 3.3%, but overall, you're still in a downtrending kind of price action, right? Or charting action. One-year inflation expectations have been dropping for a long time, and your 5-year inflation expectations came in line with expectations at 3.1%, which is slightly on an uptick, and this is the highest level we've been at in the last 10 years. In the last 25 years, if you start to break out past 3.2%, you're going to be at a new high for the last 25 years. Now, back in 08, you've seen a weird spike here to 3.4%, but this was really due to some of the effects that was happening in the markets at that time, obviously, before the great financial crisis. So, all in all, not a terrible day we're seeing in the markets. Your small cap stocks are getting beaten down, and that is another reason which would explain why AMC is down 2%, but I think it's just a lot of shorting activity that we've seen. If shorts have the confidence to be 30% short, almost 30% short, just legally, I mean, just imagine what they're doing under the surface as well. And again, they're not hedging out these positions, which means they're going to get blown out of their positions when AMC stock does rally. And keep in mind as well, the short interest has recently increased. That means that shorts were really shorting AMC in this low $4 range, in this high $3 range. That means if AMC stock starts to rally from here, starts to break above, $5, $5.50, $6 per share, yeah, that becomes a big problem pretty dang quickly, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.